really grateful this evening that we've been also joined by Lepard. And Daniel Craig.
Hello.
And my new friend, James Lavish. Guys, welcome. Thank you.
Thanks for having us.
Thank you.
So there's quite a lot we can talk about.
A lot.
There is.
Larry, tell everyone what you said you're going to do to Jerome Powell.
Oh, yeah. So I did a podcast earlier with Peter, and I don't know how we got on this subject, but we were talking about positivity and negativity in the Bitcoin space. And Jeff brings maximum positivity, and I'm the bad guy. And so basically, I was talking about how if I ran into Powell, I'd love to just kind of knock him down and beat him with a golf club. And the image of that was in my mind because one of my family members was attacked on a golf course in Florida 2 weeks ago, and by an alligator. And the alligator grabbed him by the leg, was pulling him into the water. Fortunately, his brother, who'd fought in Vietnam, was there and grabbed his club and came over and saved his life by basically beating the shit out of the alligator with a golf club. So the image was very much resonant in my mind. And I think if I ever saw Jerome Powell, that's kind of what I would like to do.
You always have the best stories.
I don't know about that.
So Danny and I spoke to Luke Woman this week. We had a great interview, super smart bloke. And he very casually dropped in the idea that we may be hitting double or high double or triple digit inflation soon in the US, in Europe, in the UK. And he was very casual about that. Like, it wasn't just a minor possibility. This is like a high possibility chance. And that really struck me because that's the kind of thing you hear about in faraway places like Argentina, Lebanon, Turkey. And so do you want to talk to people about this and why it's such a distinct possibility?
It's definitely a possibility. It's non-zero possibility. The problem we have here in the United States and the Western Hemisphere, we are beholden to central bankers who they manipulate the monetary system so deeply that we have a massive, just a monumental amount of debt that is overhanging everything. And so the problem is that the only way to service that debt is to create inflation. And Jeff Booth talks about this, and it's a major problem for the whole system because naturally technology, and this is actually what really brought me to Bitcoin, is listening to Jeff talk about this. But naturally, when you create technologies, they're deflationary, right? And I'm not going to steal his thunder on that. But the problem is central banks have to manipulate the monetary system to create inflation. Why are they doing that? Well, they're doing that because there's just so much debt that's overhanging the system that they have to pay off, right? Just think about it. If you have a system that every single one of us is operating in a deficit, basically, let's just focus on the United States. So in the United States, we're looking at deficits that they admit to this year. They admit to expecting deficits of $1.4 trillion. Okay, so how do you pay that off? Well, you can't. You either have to have austerity. You have to lower the expenses that you have in your government, right? And that's not popular. It's political suicide, right? Or you could raise taxes. They can't really do that because number one, it's also not popular amongst everybody. So you will lose votes if you do that. And secondly, it doesn't really work. Eventually, it will hit productivity, and productivity will come down, and your tax base will come down, and so it has the same effect, right? And the third thing you can do is you can just issue more debt and then pay off the debt that's retiring, that's maturing with that new debt. And that's what they do. But they have to keep issuing this debt, and the only way they can perpetuate this whole charade, this whole clown show that we have, is to have high inflation. Why? Because if you have high inflation then you are paying off past debt you're using dollars that are worth less. So you have more dollars in the system that you're taxing on your gross domestic product, your GDP, right? That's the product of the whole country. Well, you can tax that and have more dollars nominally to pay off that debt. And when you do that, you can keep the system going for a very long time. So what I think they're doing, and I've looked at the numbers, and we talk about CPI, and we talk about PPI, and we talk about all the inflation measures. What I think they're doing is they're not admitting what the inflation really is. And it's only going to continue like this until we have a massively deflationary event. And then they will print so much money, your eyeballs will bleed. And so it will be a factor of what we printed last time. And there's your inflationary event that comes in the next few years.
And I would add to that even in addition to that, they're trying to solve a problem by crushing demand that's really not entirely an excessive demand problem. It's a lack of supply problem that COVID, all the supply chains, et cetera, created. And so if you have a lack of supply problem, what do you need? You need more capacity. How do you get more capacity? You invest and build it. By pushing the interest rate up, it makes the problem worse. The cost of capital is higher, so you're not going to supply things to solve inflation. I think Luke is dead ass right. I think we're going to have double-digit inflation within the next couple of years, and it's going to be very persistent. We're going to look like Argentina. And you can see it in things like the oil price. I mean, it's very notable to me that the Strategic Petroleum Reserve kept inflation or kept the oil price down, but they didn't move to refill it, and now the Saudis and others are tightening up. And oil's going to go through $100, and we're going to be back in the inflationary game again. So in addition to what James said, you've got just a structural problem that's going to make things much worse.
By the way, if you don't follow Larry on Twitter, please do. He's one of the nicest guys in the world. But if you cross him, he will end you.
That is true. I don't take bullshit.
He is a savage. So my first question, whenever I hear any of this thing, is these things. I'm surrounded by some smart investors like you guys. I'm always like, okay, what the fuck do I do? How do I prepare? What do I do? But I'm going to throw it to Larry first. Yeah, no. Because Larry's also a gold bug.
My first answer was going to be, this is the most difficult market I've ever been in as an investor. It is extraordinarily difficult to invest in this market. So anybody out there who's feeling a little bit lost, who's feeling uncertain, yes, we all are. So,
brilliant macro investors are puzzled, okay? But I think there's some conclusions we can clearly draw that are sound if you have a long time frame. And the interim swings could be enormous. There's a Weimar chart of how the Deutschmark hyperinflated. I mean, the swings are stunning. But having said that, bonds are clearly a bad deal. There is no way we get out of this without serious monetary debasement. And so the notion that, they're just not going to be money good. They can't be and won't be money good. Stocks, I believe, general equities are greatly overpriced, in my opinion. We could have a very extreme deflationary outcome for a brief period of time, which I think will then be countered by a policy response that will lead to an enormous inflationary outcome. And so, in my opinion, the two assets that you want to hold to address that are gold, because it deals with the deflationary outcome. Gold is cash that can't be printed. It is 5,000-year-old money. It can't be printed. So if we have massive deflation, massive risk off, people, when they're afraid, they buy gold. And so, in my view, everyone should have a little bit. Okay, just like everyone should have a little bit of Bitcoin. Bitcoin is the apex predator, best asset in the world. Long term, going to crush gold. Ultimately, we'll flip it and so forth. However, I say long term, not tomorrow. And so, Bitcoin is your alpha, and gold is your Bitcoin is your future stocks, and gold is what bonds used to be. Gold is a safe place to store capital.
I would agree with that, and I would also say that, if you have cash in your bank and you don't know what to do with it, and you don't want to have 100% of your capital allocated to Bitcoin and gold, which I don't. I have capital needs. What you can do, and what I do, is you can buy short-term treasuries, short-term gilts if you're here, but really short-term, like just a few months. or less than a year. And then you can roll those and keep your capital. At least it's not just sitting in cash. At least it's, if you need it, you can. So I get asked that a lot. And I also have cash because I think we're going to be coming into an event here. It could either be a credit event, much like SVB, that happens in a way that the Fed and the Treasury cannot anticipate and cannot stop. There is that likelihood out there. I attach a fairly high likelihood of something happening there. And then there's the event of we just go into a recession, and you want to have some cash around so you can start buying things that get really cheap in a recession. Or what happens is the market will draw down, right? And we have a saying, and the saying is that all assets go to the correlation of 1, and everything sells off. So you want to have some capital around waiting for that. That's my view.
And you don't want to be leveraged. I mean, everyone should go back and study what happened in March of 2020. I mean, that's what happens when you have a massive credit contraction. And of course, then Powell came in with Draghi over the top, whatever it takes, and printed $5 trillion, over the course of the next 2 years. And so you've got to be prepared for that event. Some people ask me, said, is the bottom in Bitcoin? I don't know. I think that given how far up we've come off of the bottom, I think we're unlikely to go through 16. I think there's a possibility in a March event we'd have a double bottom and we go back and retest 16. To me, that would be just a blessing.
It would be momentary, though.
Yeah, because it'd be very momentary.
Can't tie it. You can't time that.
The one thing that you have to remember about the Fed is that at the end of the day, their third mandate, they don't say it, but it's unspoken and it's clear, is keep the financial system functioning. And the mathematics of the financial system literally guaranteed that at some point it will stop functioning. And when that occurs, they will do what they did in March. They will do what they did in 2008. We've seen this playbook. There's nothing unusual about what they're doing right now. And yes, they're saying they're going to fight inflation now until collapse becomes a bigger risk, at which point fighting inflation will go completely out the door, and you'll see, everything correlates to 1, everything goes down very sharply. They respond with an enormous policy response. They print until their eyes are going to bleed, as James says, and at that point in time, Bitcoin's over 100,000 and gold's on 3,000 on its way to 5,000. So that's a scenario that you need to have in the back of your head, and that's why you don't want to be levered, right? You get all levered up in your Bitcoin, and we have that event, and you get blown out of it. Bad idea.
A better idea is just to have a little bit of cash sitting around that you can have some bids just sitting there, like way down, because when this happens, virtually every exchange is going to shut down. Like whether it's because they just can't handle the order flow or more nefarious reasons, and we have choke points around the world where you physically can't get your capital from your bank onto the exchange to do, to make a transaction. So you got to have some bids just sitting there. You won't get a chance to buy it.
In my view, is we've got about a 50% chance that we have that event, that March, 2020 event, where that bad thing happens, something really breaks, everything falls apart. I'd say the other 50% opportunity or outcome is the Luke Gromen outcome, where they slowly but surely pivot. They keep talking their book. We get high inflation, and we inflate our way out of this thing with very, very high inflation, which will benefit all of our assets as well. It just means we don't have that dip down, and or perhaps that dip down comes at some future date.